Alrighty, everyone. We're going to go ahead and do a quick live stream here today. I thought it would be fitting with the way that the market is right now. I'm going to give people a moment to hop in here and get my chat opened up. I know it's been a little while since we've done a live stream, so it's fun to get back in the groove of things. All right, got the chat open up here so I can keep in touch with you guys, but let's just go ahead. We'll do our typical daily update here, taking a quick look across the board in the market. There's not much of a need to dive specifically into CoinMarketCap. I will spend some time to analyze a variety of the major charts, analyze a variety of the major data science models on Bitcoin, and then also spend some time to talk about probably one of the bigger macro events in crypto, which is the MicroStrategy purchase, the additional 13,000 Bitcoin that they just recently purchased. So, but anyways, I can see the chat is roaring up. We've got some people tuning in. I got to turn off my my alerts here. Vibration's gonna make a lot of noise. Let me see real quick. Sorry, I've got like a little bit of a misfit stand that I've got going on here. So give me one moment, guys. There we go. It should be good. Alrighty. Well, let's go ahead and we'll dive straight into it, everyone. So talking about the market here real quick, I want to be very kind of candid in the sense of the sell-off. I understand, guys, that it can be really brutal. It can be difficult to deal with. These sell-offs never really are easy to deal with at the end of the day. But generally speaking, I'd just love to kind of remind people of a couple of things real quick so you don't do anything like way too far out or react too much to the market. So just for some context, we've just in the past month, we've been here about 4 times already. So we're here today, for example. When we take a look at the daily chart, we were here actually back just this, just pretty much a little over a week ago around here on June 8th. We had it here back here on May 23rd. And then we were even at a much worse spot here. Then I can actually turn off the volume chart so you guys can see it clearly here. We're at an even worse spot here at around closer to that big even level at 30,000. The lowest price on at least Bitstamp was registered around $30,066 per Bitcoin. And we haven't even been coming down to that kind of range like we were at back here in early January. So we're actually holding up here around the same range every single time. And if we take a look here at the 4-hour chart, seems to be that every time we come in here, we rebound quite quickly, right? And this is the 4-hour chart, so each of these candles represent 4 hours. So again, nothing too much to be finicky about. Again, it's in this general kind of consolidation range between 30,000 and 42,000 that we've been talking about for a long time. I have no doubt there are other people out there that you guys might follow who are focusing on that same price range, which is very consistent with the midpoint here after the breakout past 20K. Where we went to 42,000, we doubled Bitcoin's value, came down here, found a new range of support, and then came up here and had the secondary wave that led all the way up to $65,000 per Bitcoin. It's very typical. It's very, very typical that, you know, in this case, in mid-cycle corrections, that we come down and we come down to that midpoint. Now, again, a lot of people have been echoing this point, and we talked a little bit about it and stuff and tried to provide a little bit of a devil's advocate perspective, which is that, Nick, this has been one of the worst corrections in the history of Bitcoin. If this is, a mid-cycle correction, and because we've never generally seen corrections that go over 50%. Well, in the last cycle, that is true. In the last 2017 cycle, we didn't see a mid-cycle correction that had an over 50% pullback. But we don't need to just analyze the last cycle, and that's actually very I think it would be very incorrect to just simply analyze the last cycle, because the last cycle is one of many cycles that Bitcoin's gone through. And as we talked about in yesterday's video, and if we take a look back throughout history, right, there was also the mid-cycle correction here in 2013 that had Bitcoin's price going all the way from $250 here to $69, and then ripping up higher towards nearly $1,200. I think it'd be safe to say that people who panicked here were probably unfortunately upset that they didn't hold out and ride the rest of the wave literally just less than a year later, right? In the same year, actually, just a couple months later. 6 months later can make all the difference, right? And again, this is why I'm constantly emphasizing here, guys, having the patience here to understand that this market cycle is very different from 2017. And it has a lot to do with where the liquidity is in derivatives markets, for futures trading, for perpetual contracts. It completely disorients the state of the market. Now, I know on a technical basis, to be completely fair, guys, yeah, the chart doesn't look very good. That's probably the worst part of this, which is that we generally topped out here, the same range we had back here in early January. And in this range, if we do decline down here to 28,000 to 27,000, yeah, it's going to be a rough spot for markets. It might take some time to recover. But I'll say that generally, no matter where we are right now or where we go to, even if we do decline to that range, historically speaking, you don't want to sell into a 50-60% discount. The thing that I always emphasize is that we've seen generally the worst here, right? We've seen the worst of this, whether it's a bull market with a mid-cycle correction or the start of a bear market. It tends to be at these 50-60% points. You're still going to get a rebound upwards. So it's best not to just panic sell into absolute fear. Now, I do want to spend some time to take a look at Ethereum and the ETH BTC chart, but as we're on the topic of Bitcoin, I would like to spend some time to go through the data science models, the things that everyone was referencing during, the past year, 2 years. A lot of these are time-tested data science models and give us some outlook into the market. Now, I know one that everyone loves, and there also is some people who don't like it, is the stock-to-flow model. Now, I don't really want to spend some time, per se, to focus so much on diving way too deep into the stock-to-flow model. All right, we have a couple other models that I want to spend some time to look at. But generally speaking, if everyone is looking for whether or not we're mimicking 2017, right? Like where were we in the equivalency of 2017? Well, in the equivalency here, we were actually in quite a similar range here, at least in the color band here, or the deviation here, the variance of the stock-to-flow model, right? Here in April of 2017, for example, we broken past the all-time highs, and then we came here and had an overall variance of -1 on the stock-to-flow model going into July of 2017. Really, the first major correction here. This was off of the China news, right? When we actually started my channel back in July of 2017, we were, kind of jumping into the space at an interesting time because Bitcoin went all the way up to 3,000, and then it crashed down to 1,800, and everyone was panicking, and there was all this news. China and all these fearful things that came up. Well, of course, the major China FUD really came after 5K, but there was a variety of panic in the market. And the variance here went all the way down to -1. Take a look where we're at right now. We're at -0.83. Right? We're having our first major deviation, right? Just like we had here on the stock-to-flow model. And not to mention, to be honest with you guys, and this is why, again, I always emphasize why things have been different than 2017, we had a break above the stock-to-flow line and hovered there for multiple months up until April. Did we ever do that in 2017? Did we ever have that exuberance in the market? Not to mention, this was, by the way, only a multi-billion-dollar market. Now Bitcoin is cryptocurrencies as a whole are a multi-trillion-dollar asset class, or at least they were around a $2 trillion valuation at the peak. A much larger market, an even much more exuberant rally past the stock-to-flow line. More than 2017. So again, this is something that I want to emphasize, which is that there's almost this kind of siloed perspective that some people can get caught in, where they get so entrapped by looking at one or two major ways of building correlations between one cycle and the existing cycle, because it's the most familiar to them. And that's understandable to do something like that, because it's just within nature to look back at periods of time, right? It's easy for me, for example, to be like, oh yeah, in 2017, right? I remember when this was happening. I remember when we had that first correction, right? But we have to look at the variations in all forms of data, right? And look at as many as possible so we can see really where we are within the cycle. Here's another one, the Bitcoin Investor Tool, the 2-year MA multiplier, right? This is basically taking the 2-year moving average here. So you can see there are periods of time where price dips below here. This is generally hovering, ironically enough, the consolidation ranges. So that's like the perfect time to really buy into Bitcoin or make large positions, at least historically speaking, right? But there's also the 5-year multiplier. So basically it takes the 2-year moving average and it multiplies the value by 5. And what you can see here is that it does give us a great idea of these kind of windows of time where within, a 1 to 3 month period, you're about to set in the market peak. In every single cycle, back here in the third one, back here in the second one here, it also showed this period of time where we were a bit overextended, and also the peak here in the first cycle, right? So we're now currently in the moment in the fourth cycle. And if this is the market peak, we didn't hover into the 5x multiple range for the 2-year moving average. Not to say that we always have to, but historically speaking, we've had 4 occurrences of that, where there were more than 70% drawdowns afterwards. We haven't gotten above that red line. In fact, I'll zoom in here. I'll show you guys so you guys can see it for yourself. We got close to it, right? But in previous cycles, there were many times, like here in 2017, where we tapped it multiple times. We had a slight peak up above here, and then after that, really had the exuberant breakout as we went from around 5,800 up here towards nearly 20,000, right? There are many times where we tested it. Back here, for example, in 2010, right, had multiple occurrences where we got real close to testing up above the 5x multiple, right? So, again, important thing to keep in mind here, guys, is that data science models aren't really speaking much to a point of fear, right? So let's take a look at the MVRVZ score. This is taking into account market cap and realized cap, which is basically people who have moved their Bitcoin as of recent, and it helps to kind of measure realized profit taking, right? So we've gotten a bit closer here. The deviation has started to decline quite dramatically. But are there any other times in history, and a lot of people are going to look at, 2017 here, right? And they'll see that, oh, wow, we've had a dramatic decline from 7 to 1.4. This must mean here the market's peaked in because we had a severe decline here in 2018. But the peak was much higher back then. It was at a score of 10, and it went all the way down here to 0.68, a much larger variance or deviation from what we've seen here. Perhaps what we're seeing here is something more similar to, as we've talked about, 2013. A mid-cycle correction where we were overextended more than we were in 2017, right? We had too much, too quick, just like we did here, for example, in 2019 in the summer. And instead, right, and you can even see here, we even have a mid-cycle point here in 2012, right, building up before we had this major overextension wave. We had a little wave here, similar to right here, right? Major breakout, and then pull back down to slightly below 1 point on the deviation. Could it be that we're going through something similar, right? Again, and you'll notice you can play the same game. You can play the same game here of focusing on previous cycles where there's a lot of correlations. There ends up being a lot of correlations as you can comparing 2017, right? But I don't even want to play the game of just trying to make the argument of the bullish case, guys. The simple point is this. When you have a 50% discount on Bitcoin like this, right, and you're holding support multiple times at the same range, I can tell you guys, this doesn't happen that much in bear markets, at least on this kind of shorter time frame. Right, you usually see breakdowns lower in this case, or bigger breakaways where you set in lower significant highs like we did in 2018, right? We have these big breakouts, pullbacks, breakaways, we come back down, right? That's the key thing here, which is that on a shorter time frame, this doesn't look like bear market activity. It definitely looks a bit confusing. It might look scary, and that's what accumulation phases are supposed to look like, because institutions don't want you being eager and buying more. They want you selling. They want eager selling liquidity into the market. They want to buy at a discount. They want to make sure they're going to get a good rate on OTC markets. They want to buy on the dip, right? So anyways, just again, emphasizing a few key points here that are important to keep in mind. Another one that I really like from Looking to Bitcoin, you guys can get these charts at lookintobitcoin.com. Highly recommend you guys routinely check these websites out. This is a really good one that came out actually, I think over the last year. I think it was created in June of 2020 by Philip Swift, who's the creator of the website. Really cool website overall, so I recommend you guys give it a check. But one chart here that I wanted to look at is the R-HODL ratio. And this basically takes the difference between realized HODL ratio, right, from the 1 week and dividing it by 1 to 2 years. And from my understanding of the data science model is that it's when people, there's a general increase in this case, the variance here between this ratio of people who have realized within a weekly period versus the 1 to 2 year bands, right? So as you're moving up here, as valuations are increasing, right, the ratio's value is increasing as well, right? So again, as we get higher and higher, we're expecting that we're much more likely towards a cycle peak, right? Especially when we get in the deviation range here between 50,000 all the way up here towards 200,000, which was the highest peak back here in November 2013. What's really interesting is that, generally speaking, we haven't had some major breakout into the red zone. And along with that as well, we haven't had a dramatic decline or deviation from the relative peak here, right? We were at around 14,700, around 6,300. It's definitely not as large of a decline or as fast of a decline on the R-HODL ratio than we've seen historically. But what's really interesting, again, going back to 2013, during that spring-summer correction, we went from around 14,500 down to 4,900. Does this remind anyone of anything? Looks a lot to me like the same general price range or difference in the R-HODL ratio that we saw back in 2013. Not everything can be compared to 2017. And let's take a look at probably what matters most of all. The Bitcoin wallets with over 1,000 Bitcoin. Now maybe it's not the most important data science model, but what I think it tells is a very interesting story. That during this period of time of peak fear, are we really seeing whales dumping on the market, exiting en masse, losing faith in Bitcoin? No, in fact, we've, generally speaking, on a macro perspective, are still quite high, right about where we were in October of 2020, in the sense of Bitcoin whales that have over 1,000 Bitcoin in a single address. But I want to focus on something very interesting here. And this is important to understand when it comes to what everyone's buzzing about when it comes to the kind of TA analysis here, and that is the Wyckoff distribution and accumulation patterns in the market. If you guys don't know yet, Wyckoff is this theory of the composite man. It's the idea about how the institutional investor manipulates the little guy and is able to build large positions at the bottom and sell them at the top. And what's really interesting is that during this upswing here, right, once we entered into what's known as the the distribution phase, my apologies, the selling phase of the Wyckoff schematics, right, we can see here that they were offloading their positions. In fact, there was a 300 wallet decline, more than 300 wallets that had 1,000 Bitcoin before that had either gone below their 1,000 Bitcoin position or might have exited entirely from their positions during this period of time where prices were stagnant. They're not selling the discount here. You don't see any decline here, really. Things are sideways. So, if the whales aren't selling, is there really any reason to sell or panic out of the market when smart money isn't doing anything? Well, I wouldn't say that all whales are smart money, but not every investor who's made money is always the most smartest individual. It's not they're per se not the Einstein of every single topic in the world, right? But the key thing here to understand when we're analyzing macro movements in the market, these kind of longer term time frames, we're analyzing over nearly a year's worth of price action here. We can see here that they're not selling now. There really hasn't been any adjustments. Now, I'll be fair as well. There hasn't been massive accumulation, at least in the on-chain data yet. Not a major swing of buyers coming in. However, we do have some of our common contestants or our usual suspects. And the biggest one here is MicroStrategy. Michael Saylor and the team of MicroStrategy purchasing another additional 13,000 Bitcoin, totaling, in this case, a total of 105,085 Bitcoin, an average price of $26,000 per Bitcoin. So MicroStrategy is still in the green a little bit after considering expenses and fees. And, now at this new average here, has an average price of 26,000. So, look, I think, guys, overall, in the sense of the MicroStrategy news, my take on it, I don't think it's incredibly bullish news. I think MicroStrategy is a little bit of an anomaly. But I want to say something that I think is very important for people to hear, is that anytime Bitcoin is sold, in this case, someone is buying it. And vice versa. Anytime Bitcoin is being sold, in this case, anytime it's being bought, someone's selling it, right? Someone's offloading a position. The key point here is that with any general move in the market, you're having buyers and sellers. The thing that's going to dictate what moves price higher is who's more willing to market order. That's what it is. Who's willing, instead of setting a limit order, to either buy at a given lower price or sell at a given higher price, who's willing to pay? Who's more eager in this case? Who's more eager to push through the order book to the downside or the upside, right? And in this case, what we generally want to see here over the next couple weeks is that we're able to see buyers coming in consistently at this range, around the low 30,000 range, driving up price again for the next coming days, and eventually pressing past that 42K range. That's all we have to see. And so far, we haven't seen anything, in my opinion, that's gotten me in a state that the market is any more fearful, is going to get any more fearful than it already is. Basically put, that we've seen the worst, because every single time buyers are coming in here, they're coming in and buying this discount. So what I see this as is a general accumulation range. And you can either treat it like a distribution range where it's like, oh, I got to sell. Oh my God, this is a terrible time. The markets are done for. Who allowed this to happen? The psychology that everyone has during this time. Or you can put your emotions aside and see if you have additional capital that you're willing to bet on the market. Plain and simple. I'm not telling you guys to do that. All I'm saying is that with this discount, with this dip, I averaged into the market. I haven't been panic selling. I know we've got around 1.5 thousand people tuning in. I want you guys to know very, very clearly, I'm not selling anything right now, right? I've been in the market. My positions are exposed in the altcoin space. The only thing that I've thought about is when we do get a rebound, if it makes sense to cycle from altcoins to Bitcoin. But I haven't done that yet. I'm still heavily exposed to the altcoin space. You don't see me panicking, not worrying too much, because, again, I understand I'm reading what the charts are showing you in this case, that every time we come around this range, people start to accumulate. Take a look at the volume here as well, right? You get these big spikes in volume, big deviations in this case. I'm deviantly buying Bitcoin at these lows. But you can see here, again, you start to get increased volume coming through there. Buyers quickly making back up any downward price moves. Why panic here if we have no reason to? Anyways, I've rambled on a good amount, guys. I want to go ahead and start answering some questions. Let's see here. I apologize I haven't dove in too much into the chat. Someone said, what will you eat, man? You'll be homeless soon. Ramen noodles. I dealt with ramen throughout a lot of my childhood. I can eat some more. Just kidding. Nah, I'm teasing. But let's see here. One thing I want to check on, guys, if you guys wouldn't mind mentioning in the chat if the connection's good. I haven't asked about that. So Bang Petit asked if I think that if we come down to this $30,000 range that we're going to 18-20K. No, I don't. I really don't think that's the case, guys. I think that we're going to generally hold at this range, and if we do fall below the range, there's something that is important to understand, which is first off that we already came down here to 29K 2 times, right? I think this is your worst case scenario, like 29,500, like peak capitulation. People who maybe took on excessive leverage here are going to get liquidated and cause another second capitulation candle. Again, I would recommend, if you guys haven't already, watch yesterday's video, or not yesterday's video, sorry, my most recent video outside this live stream, after the live stream. It will provide a ton of context about what makes this cycle different than others, why we have more exaggerated sell-offs, but also more exaggerated rallies. We've had it 2 times. We had it here after we broke past 20K. We shouldn't have gone all the way to 60K so quickly. And not to mention as well, 65K in that case. But we also had it back, we set in the low at 3,100 in December 2018. And within a matter of 6 to 7 months, we went from 3K up to nearly 14K. One of the fastest recoveries in Bitcoin's history. And the reason why is because everyone was short the market, and there was a massive short liquidation. A lot of people got knocked out, and in this case, it caused a short squeeze. It caused valuations to go up even higher. All those people who had to short, in this case, got squeezed, and they had to repurchase their positions. Not all of them in this case, but a good chunk, depending on how they're actually going about shorting the market. So yes, so there's something important to talk about here, which is a question from Naz. He said, Nick, what do you think? What do you think of China, Nick? And this is an important thing to talk about, guys. Why this accumulation phase seems to be going on for so long, and why there's this kind of continued fear in the market. A big reason for this is what's going on in China right now. And we can go ahead and I'll pull up. We could pull up the for example, we could look up the actual hash rate, Bitcoin hash rate. Oops. Bitcoin hash rate. Go ahead and pull up the hash rate chart here. BitInfo Charts, great website. You can see here that the hash rate has declined quite steadily, right? And you can see here as well that a lot of it has started to come in May following the dramatic sell-off. So we've gone all the way from 171 exahashes securing the Bitcoin network down here to, I think, a reading of 91 exahashes, basically where we were in November of 2020. And look, I'll be honest with you guys, like, just to provide some context, first off, like zooming out, Bitcoin's hash rate looks phenomenal. Like it's had a massive improvement from where it was, say, let's just say for context, right? If you want to say that there's got to be a correlation between hash rate and price. Well, in January of 2018, actually, let's step back here to the actual general market peak around mid-December. Bitcoin had 12.3 exahashes of hash power that's actually going to securing the network. And now, even after a dip here, right, we're at $10,000, a little over maybe $12,000 more than those previous all-time highs at 20K in the previous cycle. Years later, we have 91 exahashes. There's no correlation between price and hash rate. I've heard people talk about this before, and there's none. I mean, generally speaking, Bitcoin's hash rate just increases over time. And the reason for that is because that Bitcoin's price generally, as time progresses, goes up due to the stock flow model and the reduction of supply and Bitcoin as an emerging asset. And second off, the biggest reason, people find cheaper ways to mine Bitcoin to make it profitable. Generally, more and more tailoring towards renewables or heavily subsidized government electricity through China. And that's basically what's been going on for years, is cheap electricity. Unfortunately, there was a lot of people who were abusing a variety of different government programs and initiatives. And I just realized as well, sorry guys, I know my graph might be getting in the way, so I'll see if I can zoom out so you guys can see it a little bit better. I'll drag up my chart so maybe you guys can see it a little bit better. But anyways, I digress on it. You had a lot of people who were abusing a variety. I talked to a ton of people in Bitcoin Miami who work in the mining industry. And the general gist was this, like, first off, like, there's these crackdowns all the time. However, this one is a bit more serious. They're either going to heavily tax mining to where it just doesn't make sense anymore. And there was also a lot of people abusing a variety of government-funded initiatives that would help them to, They'll get government grants, not have to pay taxes at a higher rate, etc. There was a lot of things, not to mention China, generally speaking, doesn't want much money moving out of the country. And that's what Bitcoin mining was probably generally for, to get money that the Chinese government didn't have control over, censorship-resistant money. So anyways, I mean, guys, just look at this chart here. Like overall, what you have here when you have declines in the hash rate, when you have difficulty adjustments every 2 weeks, where it becomes easier or more difficult to mine, when hash rate's declining, it becomes easier. You're going to get a lot of people, and the same investors in this case who are in China, moving their miners externally, finding ways out. Other foreign miners in the United States and in Europe and in Latin America, I know everyone's talking about El Salvador, but a lot of it's really going on in the US, starting to get into the mining game. I know a ton of people who are moving miners, building new plants. They're getting ready to adjust. This hash rate is just simply going to migrate. So anyways, I hope that provides a little bit of comfort, guys, on the sense of the China news. I know that that's probably the biggest macro event. So I'm happy to hear the connection's good, guys. Awesome to hear. Very nice. All right. Let's see here. Scott asked me what has changed with the purchases you made in Puerto Rico. I've still got them. Those are the accumulation purchases I made. It was when I did that video. Many of you probably saw when I was like on the beach, and yeah, I did that little like one-on-one kind of pep talk video. I was like, yeah, I haven't sold a damn thing, right? Francer Polson asked, if you fast for a while, do you not eat at all, or for how long? You look healthy, man. Thank you, man. I appreciate that. Yeah, I did. I don't do intermittent fasting very frequently. I like breakfast, but I have done. I did a 6.5 day water fast, where I kid you not, guys, all I had was water for 6.5 days. And it's incredible. It's incredible what your body can like hold up to. I maybe felt a little bit hungry, or like I was pushing on the edge of it after 6.5 days, but for a lot of time, like I was actually okay. I drank a good amount of water, and it was actually really nice. And I could tell like my digestive health improved a ton. Anyways, I know this is not a medical channel, so I should probably keep from being too much TMI. Alrighty, let's see here. Any questions here? Someone asked me, Cody asked me in this case, when will we see an altcoin cycle up? I think that's a very important question. I was actually going to dive over into the Ethereum chart, and then also maybe even to altcoin dominance. So just taking a look here at the long-term chart, we're going to take a look at the weekly logarithmic chart. This is Ethereum here. And what's really interesting about the Ethereum chart overall is that we're playing out relatively similar to the previous cycle, right? When we were below this kind of midpoint dotted line here, right? We had a breakup, faced some resistance here. All right, what we've got here is now we're generally similar to back like over here. We're at the midpoint, but what I would actually kind of compare it to here, right, is that whereas last time you had generally Ethereum coming from practically nothing, a couple cents up here towards 4 digits in this case, massive move percentage-wise, right? If we're looking at the same time frame here, it's almost as if there isn't per se like a mid-cycle correction. We've got this midpoint here, right, where we had it as resistance, we had a support, and then broke away. I think this time around we're gonna just generally hover along this and then start to actually have a breakout later on into 2022 for Ethereum, like a major move up to where we could reach $10,000 as we go through later phases of ETH2, and not to mention we also have, when now everyone's buzzing about EIP 1559, layer 2 solutions that are starting to garner traction. We're just riding along that midpoint line right now. Right? Nothing too crazy, right? We had a nice extended breakaway. I mean, guys, we went from $80 up to a high of 4,000, I think, right under 4,000. Yeah, I guess technically the high was close to around 4,400. All right. Let's take a look though at the Bitcoin chart here. This is one that I think is really important to watch. Right? We've also got another midpoint line here. We won't see it very clearly when we take, unless we look at the weekly here. Right? You got a point of resistance here, a general support range here before price moved higher 2 times, right? When we broke bass below here, we broke lower, right? We can also see that this midpoint here also held down price. But what's interesting is that if you consider the previous relative highs here throughout this cycle that we've been through, back here from October 2019, February 2020, August 2020, and here in February 2021, we've actually got a chance here to make this previous points of resistance new support up here for Ethereum. So what I want to emphasize, and this goes for altcoin dominance in general, I'm finally getting to my point here, is that overall we have had lower highs here, lower significant highs in altcoin dominance, but we haven't had lower lows, right? We haven't seen it yet. We haven't seen a complete rollover yet. So this is why I haven't en masse adjusted out of my positions here. And we're going to wait till we get that confirmation of a trend reversal. Because altcoins have paid quite nicely. We want to make sure we do take profits, but we want to make sure that the trend is confirmed to be over, right? We don't have to wait till down here or anything. We're just going to probably wait till we get closer here towards around 52 and look like we're getting closer to possibly setting in a lower low here around 50% dominance, right? I'd rather wait on it because it's a big taxable event here in the US if you decide to take profits in this case on a trade, especially the ones like we've been riding since back here. We built a lot of positions here between November and December, right? Built some good sized positions. So again, we got to be patient on it, or at least me personally, that's what I want to do. All right, let's see here. George asked if I've been averaging into Bitcoin and altcoins. So when I bought the dip back a little while ago, with the loan I took out on Celsius and stuff with the the discount in the market, I bought mainly altcoin positions. The one thing I'm thinking or considering about is possibly as we start to possibly see a trend reversal in altcoins, right? I would definitely consider rotating those altcoin positions into Bitcoin. Not to mention there's not a major kind of profit profile on those. So rotating that into Bitcoin, giving myself some more Bitcoin exposure, that would be probably the first step of any adjustments I make. In the sense of additional fiat adding, unfortunately I just don't have much fiat on hand right now to make any major positions. If I did, if I had a major money printer like the Fed did, or if I was MicroStrategy who could do a convertible note raise where I could just basically raise capital just like that, or millions of dollars, then for sure I would be buying some Bitcoin and some altcoins at the moment, or mainly Bitcoin to be fair at this range. It just seems to make more sense at the moment. Thank you very much, Alex. I appreciate the kind donation and kind words, and I'm glad you love the Discord. Yeah, you guys are always welcome to join the Discord. It's a great community that you guys can hop into. It always tends to come alive and stuff after the live stream where everyone can hop in and chat. I try to make it in when I can, but I don't get on Discord too much. It's the same with Telegram. Honestly, I've had a difficult time finding the time to hop in the voice channels like I used to. Someone said Nick hold me. Don't worry, guys. I'm here for you guys. I want to do the best I can to keep everyone calm, and I hope my actions speak louder than anything, guys. In the sense of how I'm reacting to the market. I'm not panic selling. I'm holding out there. It's not a big deal. I mean, we've been here before over the last couple of weeks, multiple times. And what's interesting is, what was a nice clean 50% discount yet again, it seems, if I'm not mistaken, that buyers are coming in. Bounced up nearly, I think from the lows here. Coming up here on $1,300 in price increase in Bitcoin here. Oh, look at that. Look at the volume candles on that on Bitstamp. Let's take a look at Coinbase here. General volume profile starting to signal we're getting some buyers coming in here, right? Just like what we saw back here. We'll pull it here to the 4-hour chart so it's not so scrunched up. Same exact kind of buyers coming in here at the same discount range. Typical accumulation. Brian, I declare bankruptcy. I declare all my, I would like to claim my original money I put in the market. Now, there's a really good point here, which is that this individual named Paul said, I see a lot of FUD in the comments. If y'all are afraid, just sell your positions. For us long-term always, this dip is just another discounted sale. And that's the mindset. I mean, guys, if you really want to sell, you know, if you've made, and this is something I emphasized on the taking profits video, it just would be more relevant, of course, around the 65K range when we actually put out the video, is you know, actually having an exit strategy for crypto. If you think this is the cycle peak, if you think this is a valuable time to sell, and that you think prices are going to 10K, you know, you don't have to listen to me. There's no reason to have to prove me wrong or anything. You just go out and do what you got to do. But understand that there are, if you've made a profit, tax ramifications. Heck, if you actually bought at 60K, you actually can technically sell and harvest tax losses that you can write up to, I think in the US, you can write up to $3,000 in the year of. But the next year, you can write them off. Like if you make really great gains the next year, then you can, you know, you don't have to pay taxes on a lot of those gains until you've cleared through the written off losses. That's in the United States. I'm not a tax attorney or anything, but I just want to mention, like, there's these things you have to think about overall. But you have to consider the tax implications. And then outside of that as well, if you completely cut yourself out from having exposure to the market, accept the idea that, you know, if prices rebound, then you're going to have to buy at a higher price. But also consider as well that, yeah, you know, maybe you could be right. Maybe prices could go down. You could get a discount. It really depends on how you want to approach it. But this shouldn't be a game, guys, of saying, oh, the market's going down or it's going up, right? I'm simply saying here that for me personally, it doesn't make sense for me to really cut my exposure yet. It just doesn't for me personally. Right? And that might not be the case for all of you guys, especially if you've made life-changing returns on crypto. If you bought anywhere during the accumulation phase, and you know, Bitcoin's up here to 33,000, or some of your altcoins that made major moves against Bitcoin as well, it might be time for you to take profit. But historically speaking, it's not good to sell into peak fear here, right? You know, I mean, even just waiting here until we get towards the upper band of the accumulation channel that we've been in, I mean, you could sell for a much higher price range. So let's see here. Lindsay Gullis said breakfast is the best. Yes, I completely concur. I can fast. I can have no breakfast, but it just isn't the same. Like who doesn't want to eat eggs? Like eggs are great. Great way to start the day. But I think I'm a little bit behind in the chat here. People are still reading about the fasting. Another Nicholas, I love the name, said they did an 8-day water fast with salt and potassium added. Felt great. Yeah, it's a great way to give your body a break. It's incredible. All right, I'm going to scroll through here a little bit. Brendan asked me, am I leaning towards the expanding cycle theory? I know you were in the past, but with the exuberance early on, as you stated, you started getting away from that. Oh, throughout that thought process. Yeah, so it's actually a very good point, and I think it's a good time to talk about the expanding cycle theory, because everyone has different ways of analyzing the market. So I'll clear the drawings here just to give us a fresh, clean slate. So the idea of the expanding cycle theory is it's how you look at analyzing cycles. A lot of people maybe look from top to top. You know, that's what some people do, but for me, I like to focus on bottom to top, right? That to me is what a cycle is, right? You have the low point, right? And you get the high point. So each cycle here, you know, if we actually just keep it simple to monthly analysis here, right? We have the first cycle here, which is 11 months. We have the secondary cycle here, which is 24, an addition of 13 months. We've got one here, top to bottom, the 2017 cycle, 35 candles, at an addition of 11 months. And historically speaking, if we analyze, you know, these three values, we can see that we've added 13 months in this cycle, and in this cycle here, we added 11. So if we were to meet in the middle around 12 months here, we would come out to, I think, if I remember correctly, I'm sorry, the thing's blocking it. Oh, sorry, no, it's I think it's November of 2022, right? Yes, if we had 12 months. So November of 2022, setting in new cycle highs, right? So let's say we reach that optimistic target, 200K, right? This overall looks about where we were here in the 2013 cycle, right? Where we had the breakout above the midpoint here, came down, pulled back, and then we had a cannon shoot up here going into November of 2022. Not a bad setup. Not a bad setup at all, right? And this is the key point here that I want to emphasize, guys, which is that overall, I mean, in any previous, let's just say, for example, right, this was the cycle peak, right? Let's go ahead and let's follow everyone's assumption here that's bearish on it, right? This was shorter than the 2017 cycle by a long shot, by 7 months, right? This would break the rule here of bottom to top analysis of expanding cycles, right? If this is really the peak of the market, I mean, this is a major disorientation. I would say, in fact, this would be a terrible sign for Bitcoin long term, because if the cycles are getting shorter, the multiples are really starting to decay here. If we're only having a bottom to top rally of 2,000% versus the last cycle where we had a 12,318% return, that's pretty bad news for crypto. And if we have to have another year-long bear market here, where are we going down to? 15K, 10K? Now we're actually going to start breaking another rule here, right? If we really start to go down, 80%, right? If we're expecting here that we're going to go down 80%, bear in mind, we're going to do something that we've never done before, that we are going to pull back, right? So for example, like you generally speaking don't, how do I put this? You wouldn't come back down to the previous all-time high the last cycle, right? So when we came down here, right, in this bear market after this bull run, we didn't come anywhere close to the previous all-time highs at 31K from the previous cycle, right? You can see here, even after an 80% correction, nowhere close to that previous peak. If we have an 80% correction from these highs, right, you're talking about going down to territory we were at in November of 2017. That would spell really bad news for crypto as an asset class. It would say that probably crypto is dead. I don't think that's the case, guys. It just doesn't make sense here to have a full bear market and 80% correction. It could, who knows? I'm not saying that something is entirely inevitable or not possible. Yeah, things can happen, but historically speaking, it just doesn't make sense if you're following any recollection or kind of recording of history, right? So anyways, I'm curious at what you guys think about that, but that's the thing that stands out to me is like, okay, so this is a bear market. Well, if you're following like the kind of history of you think this is a full bear market, well, every single time, right, we got a peak here, sell off here, right? We got a major decline, right? Actually get the more precise point here just to make sure we have accurate percentages, right? 93% correction. Okay, really brutal correction there. Let's take a look here. This correction here, over 86%, right? Let's take a look at the correction here, December 2017. If we're going to compare 2017, we better look at the expectations of sell-off here, 85%. Yikes, right? Maybe we'll bring up a little bit here. I might be off a little bit on the exact percentages. But we're calling conservatively here for a bear market correction of 80%. This would be the lowest one, the shortest in the sense of percentage decline, right, that we've ever seen in history. If we only had an 80% correction, if this is the bear market here, we should expect at least an 80. And heck, you know what? Let's be a little more fair here. Maybe let's go to 70%, right? That would still take us right down to the all-time highs. Even one of the most conservative bear market estimations bring us all the way down to the previous all-time highs, something we've never done before. Perhaps, because we had multiple months of green and we only had a few exceptions here where things were relatively neutral, right? multiple months of green without any kind of potential pullback or healthy 20-30% correction, perhaps, well, we did have 125% correction, but was still ended up being a green month here. Perhaps we needed some time for Bitcoin to cool down. I think that's a much more reasonable explanation, that we're just in a mid-cycle correction, and that we're playing out a lot more similar to 2013, not in the sense of percentage returns, but in the sense of having multiple months of green price action, overshooting our shot here in this case, in the sense of the market, and coming down and having a couple months of consolidation. I think that's what's playing out right now, guys. Anyways, I've rambled on enough today, guys. I think you guys have heard me talk enough. If you guys enjoyed this video, consider dropping a like. It always means a lot to me, guys. And if you haven't already, if you're new to the channel, consider subscribing and hitting the bell icon. The few things I want to emphasize to you guys is that, again, during these periods of time, don't do anything completely out of touch or irrational. You can see here that, you know, exaggerated or capitulation candles, exaggerations in price or capitulation candles can be recovered quite quickly. And a lot of the times these exaggerations and sell-offs are caused by people getting liquidated, right? It's not people themselves selling, it's the exchanges selling their underlying collateral because they were under collateralized for the leverage that they're taking on, the overexposure to the market that they're taking on. But if you just buy spot, if you just invest with your own capital, you can be in a great position. You can take the brutal sell-offs because there is no liquidation event, right? You're only down on paper in this case, or have lost some of your gains on paper, right? Again, I highly recommend focusing on the long-term strategy. If you guys have another market that you think is going to multiply like crypto, or you think that crypto is done for, have at it. Go invest elsewhere. That's perfectly fine. I'm not even here to say that that's wrong. I bet you could go make money in equity markets. You could possibly, if you use moderate leverage and you keep a longer term time frame horizon and do enough practice, yeah, maybe you can go make money in Forex and in commodities, etc. But I gotta tell you guys, I've macro invested for the last 10 years. Or, sorry, not exactly 10 years, my apologies. More around 8 years in this case, right? I've studied markets for the last 10 years. I can't tell you guys of another market out there that excites me more than crypto does. Plain and simple. And I hope my actions of really not selling anything, in fact, just accumulating back during the May dip and still holding those positions, I hope it speaks to that. All right, guys, that's it for my rambling today. I think you guys are going to go probably crazy if you hear me ramble anymore. And I really appreciate the kind words. One last question. We got it from Benny. He gave a donation, so I'll answer. I appreciate it, Ben. He said, how are you managing your BlockFi collateral-backed loans? So in this case, like if you're using a platform like BlockFi or Celsius, they'll help notify you if you need to add more collateral. But the basis is this. I never take out leverage first off, I take them at the most healthy levels, in this case, with a heightened level of collateral. And second off, if there's ever a chance of a margin call coming out, guys, you should always have additional collateral on side to add to the loans that you're borrowing from. Plain and simple. Don't borrow capital unless you have additional layers of collateral. That's the problem, that people can't recollateralize because they put every bit of their chips on the table, right? I'm not recommending you guys do this. I'm just letting you guys know that if you are going to take collateral out, please do it right. Know the multiple steps in order to protect yourself so you don't wreck yourself. That's an important point. So anyways, guys, love you guys very much. Thank you guys for tuning in today. It was such a great stream. It felt so nice to be back in action. And yeah, if you guys have any kind of thoughts or ideas on what we talked about today, feel free to leave a comment down below in the video once it publishes. But thank you guys so much for watching. As always, give me some extra time today, and I'll see you all in the next video. Take care, everyone. And I apologize, I wasn't able to play the midnight, guys. I got to figure out how to get audio playing on the desktop, but I'll try to do that for the next stream.